Welcome back, you guys. We are looking at lecture 2 for the summer program. We are still on the section 1 of the syllabus. We would have looked at the first part of section 1 last week with the nature of business, in that we looked at the creation of money, barter, the different forms that money can take, right? So I hope you all were able to review the recordings of last week. And if you all have any questions, please leave a comment or even message me via the chat. Okay, so we will be continuing with this topic. But this part of the syllabus, we are looking at different forms of business organizations. Okay, so we are still under section 1 of the syllabus. Okay, everything will be on YouTube. As I will stress this over, everything will be on YouTube, so you all could get the YouTube channel, iLoveLessons, as well as subscribe, so whenever it's being posted, you all will get a notification. Yeah, so you don't need to write any notes down, but we could, if you have any questions, however, please, when you all are doing the questions, whatever you all may have, please ask them via the chat so we wouldn't miss out anything. So we are continuing. So we looked at last week the definition of an organization. So we did start off with looking at what an organization is, and we're seeing it as a group of people coming together to establish a common goal. And we all established that the common goal for all organizations is to make a profit. So business organizations are centered on creating goods and services for profits. So we need to acknowledge here now that all organizations there are different forms of business organizations. And we have it listed here in the table, just a few. We have the sole trader, the partnership, cooperatives, Okay, so I don't know what just happened with the Wi-Fi. It just dropped for a second, but I'm back. If you all are hearing me properly, we are going to just put back up the screen. Okay, so this is something that you all should note. Yeah, I am seeing that Wi-Fi dropping. I don't know. It should have a, well, I think there's a mild storm or something like that that I heard on the news, but I see that you all Wi-Fi also as well. So we back on. Hopefully it doesn't drop again. Making sure that this is being recorded. And excellent. So forms of business organization. So we're now looking at the first one being the sole trader. And this is what I was just, before the Wi-Fi had dropped, we were talking about, you should pause the video and try to remember if you all have done this subject before, if it's new, you all know that we were doing this. So you should have read ahead of what these different forms of business organization entail. So that's what we are looking at. Okay. So sole trader. We say a sole trader is a single business owner. We looked at that last week. And we also said that he or she will make all the decisions of the business. He or she will get all the profits, as well as if there are any losses, he or she will incur all the losses. That is a sole trader business. So we did that last week. We looked at the definition, as well as we looked at the characteristics of a sole trader. So remember we said it was easy setting up of a sole trader business, except if you want to register the name of the business, you have to register it with the registrar of companies or business, right? There's a procedure. That's if you want to register the business, but it is not a necessity for all sole traders to do so. Okay, so sole traders, it is very easy to formulate. It's very easy. Okay, and we looked at this last week as well, the different advantages and disadvantages of a sole trader. And you were able to actually answer majority of the advantages and disadvantages of a sole trader. So again, if you have any questions, any concerns, anything that is just not making any sense, please let me know. Please write it down if you all are, well, when you all are going to study after the session, making extra notes, and you come across a difficult area, please write them down. So by next class, you all will address it to me. We are looking now at the next type of business organization. You all remember what it is? Okay, remember? Yes, partnerships. Okay, so partnership is our next business organization. And we say a partnership is an association of people coming together with the aim, yes, of making a profit. But we have different people and we would have to share this profit too. It comprises of 2 to 20 persons operating this business. Okay. So I think I remembered mentioning this last week to you guys. So how would you remember what are some of the advantages as well as disadvantages of a sole trader versus a partnership business? Well, simply partnerships. Yes, there are more people where sole trader is just one person. Whenever there's a profit, sole trader benefits 100% of that profit. Whereas with the partnership business, they have to share their profits amongst each other. Yeah. So I'm seeing some excellent answers here from you guys where, a partnership, more people will be bringing in more skills, advantages. There's no legal formalities. But I'm seeing one error here from you guys. I'm going to draw it to your attention here now. But a partnership business, seeing it as just like a sole trader, you will have some debts. You'll have some liabilities, some, that may be incurred. And when they do incur it, sometimes personal assets, sometimes they will be seized or they will be used to pay off whatever debts that the business incurred. So while the sole trader was able to incur this loss and bear all the loss, so too does the partnership. Okay, so let us look at this note here on partnership. So we say yes, there's an association between 2 to 20 persons operating a business with the common goal of making a profit. So making a profit is the common goal for, we can see from a sole trader point of view as well as a partnership point of view. We also say that there are two types of partnerships. We have the limited liability partnership, at which one partner must have unlimited liability, and then there's the unlimited liability partnership where all partners have unlimited liability. This is an important slide that you all need to note. Okay, so instead of me just reading what the slide is saying, to explain limited liability and unlimited liability, what sense can we make out of these two broad terms? Limited liability, meaning whatever debts are incurred in the business, hey, partnerships will be able to, yes, incur this loss. They will experience this loss, but at a limited, it's of a limited nature, meaning the bank, whoever I'm owing money to, the bank cannot come and seize my house, my car. Sometimes past students will say, you know, my husband, my wife, because you know they're rich, they will come and take my wife. Some of the students will say they will come and take my dog because you know we have well expensive dogs out here. You know, with limited liability, banks cannot come and seize our personal assets. They cannot touch it. Whatever we would have put out into the business, that is what we would just lose. So we put out $10,000, business suffer a loss. All right, we lose $10,000. Just $10,000, yes. Not a house, not a car, not my dog either. Right? So that's for the limited liability partnership. And it's saying that when you are in a limited liability partnership, at least one partner must have unlimited liability. So that's the second point of, okay, if we know what limited liability partnership is, unlimited is just the reverse, it's just the opposite. Meaning, we cannot, you're seeing the screen here, right? I'm just making sure that the slide is up, that you all are seeing it. Yes? Are you all able to see it a lot better? Excellent. Okay, good. So, do I need to go back to anyone and let me just, so we're looking at partnership, 2 to 20. So we're looking at the unlimited liability partnerships, right? All partners have unlimited liability. So going back to the examples of, you know, we incur this debt, we have to pay it back. But let's just say the debt is so much, it's more than what you actually put out into the business. Guess what? Banks, creditors, people who you owe will have to come and find somehow to get back their money, and they'll have to come back. They'll have to come and see what can we get, what can we take. That expensive jewelry, yeah, they will come and take all of that. So in other words, we have unlimited liability. Whatever the debt is, we have to be mindful that they can come and repossess anything besides what we put in. They will come for more until the debt is settled. So do you all think you all understand the difference now between limited and unlimited liability? Yeah. Okay, so it's very simple, but you all will just need the guidance when we are starting our past paper session. So past papers, we are going to be starting that very soon because section 1 of the syllabus is almost completed. All right. After this and this other topic next week, we are through with section 1 and we can actually start our past papers by looking at, the first question or the first 2 questions of the past paper. Okay. So just understand, yes, it's very excited when we start these past papers. Because when you practice enough, you will see a trend of how examiners structure their questions. You will see, you will have an idea of what to expect for your upcoming exam. That is what you will be guided by through working with the syllabus and working with the past papers. And this, my dear friends, this partnership, you're going to see it somewhere in that past paper at all times. Partnership, sole traders, just name it. We want to look now at the characteristics of a partnership. So the characteristics of a partnership, we see that there's a minimum of 2 persons and a maximum of 20 for formation. However, for professional such as lawyers, accountants, a minimum is not given since they are not allowed to form companies. All right. So the first point is just saying simply minimum of 2, maximum of 20. You all know why we say minimum of 2 is because if it's just one person, it cannot be a partnership but a sole trader. Maximum of 20, but it cannot go beyond because it can form a company. So it must be 2 to 20 persons. The second characteristic that we are seeing here on this slide is that capital is provided by the partners. So capital is being provided by the partners. So what does that mean? Good. So if a partnership means that more than one person coming together to form a business, if capital, yes, they are coming together, not one person, but many persons are coming together to make this profit, right? To come together to invest their capital, they invest their monies. Okay. A limited partner cannot take part in the management of the partnership. Meaning, when you form a partnership business and they make this investment into the business, this limited partner, we call him or her the sleeping partner. Yes, I said the word sleeping partner. They are just there to invest some form of capital, but they are not actively working with the other partners. They are not. Do you all understand? Good. Profits are shared equally unless stated in the agreement. So if profits are being shared equally, it means that while a sole trader is able to benefit from all the profits, partners have to share all the profits amongst each other. And luckily for you guys who are doing PoA with me, we'll be starting partnership accounting very soon. I'm going to make sure that we do it before the summer program finishes. When we look at partnership accounting in POA, you're going to see that when partners have to share their profits, depending on the amount of money that is being invested in the partnership, will determine how much profits they will get. Sometimes profits can be shared equally. Sometimes it can be shared in a ratio. Sometimes it can be shared based on what they invested. All these different scenarios are going to be popping up in front of us and be like, okay, this is how they're going to share their profits. Tim gonna get only 5%, with B will just get probably 50%. But we have to make up that whole of 100%. We have to share this profit on what are the agreements in this partnership. So see that I just said that word agreement. All partnerships have some type of agreement, which is called the Partnership Act of 1890. I'm going to correct myself there. Not so all partners, yes, they have some kind of agreement and they are governed by the Partnership Act of 1890. But if you are a partnership business and you do not follow that Partnership Act of 1890, I just call it 1890 because that is when it was first established, profits can be shared equally. But if they are governed by the Partnership Act of 1890, depending on what was invested in the partnership business will determine how the profits will be shared. All right. A partnership deed is usually written up to form the agreement. This agreement usually indicates the number of partners, amount of capital from each partner, how profits are to be divided, name of the partnership, salary to be paid, how partnership is to be dissolved, the role of each partner, etc. So we just see here, you guys, that with this partnership deed, also called the Partnership Act of 1890, you could write that down somewhere in your notebooks, so you will have it there. It will just guide the partners on how are we going to operate this business. If we have a new partner, should this partner benefit with at least 50% of the profits or just what they invest? All of this will be key stepping stones for the formation of this partnership business. So we're looking back at these types of partners. We said it's the general partners, which are the unlimited liability partners. And we have the limited liability partners, where they cannot come and repossess personal items. Only what we invest is what we will lose. So let's take a read of this. You could obviously look at the points that I have on the slide. And I brought back in the point that I just said earlier. Sleeping partners, they invest in the business, but they do not take an active part in the business. All right. So these are just key characteristics of different types of partners. Right. So just to summarize again and to conclude, the difference between unlimited and limited liability. Unlimited liability, meaning debts of the partner, and this is DEBTSR, debts of the business will be incurred, and personal items, personal assets may be lost because of unlimited liability. With limited liability, debts of the business will be incurred, but will be only limited to what the partners put out into the business. So whatever you put out is what will get lost. With unlimited, whatever you put out, and even more, your house, your car, your land, that will be repossessed by the business. Okay? So I hope, Laura, that explains limited and unlimited liability. Just give me a thumbs up if you're okay with it. Good. Right, I see your message. So we are looking at the advantages and disadvantages of a partnership. This is partnerships as a whole. It is relatively easy to set up. More capital can be obtained than a sole trader. More people are coming together, obviously. Business will not end if one partner dies. You see this number 3 advantage here, you guys? This is one of the leading examples of an advantage for a partnership. Whereas you see with a sole trader, if the sole trader dies, there may not be any continuity of a sole trader business. So I hope you all are acknowledging and appreciating the fact that I am drawing back to a sole trader business. Because in exams, yes, they may ask, okay, advantages and disadvantages of a partnership, but compared with a sole trader, that's where you have to write a little bit more of a comparison between the two types of business organization. So what we have here again on this slide under advantages is that specialization can occur, thus leading to greater efficiency. Specialization meaning that you can specialize in whatever your field may be, whatever your strong point is. In other topics in PoB, we are going to look at different areas of a business, and you can fall into one of those different categories, whether it be finance. You can what? What else you all like to do? I mean, I know you all like accounts, right? So finance, you all like dealing with people. You're like some adults here in the class, customer service. You think you could deal with people 24/7? All right, let me put you in HR. You specialize in people. All right. So if you don't like dealing with people, all right. I want to just work with myself. I want to be creative. I want to design the products that we have in this partnership. All right. So let me put you in marketing. So you see those different categories in a business, which we will be looking at in later topics in PoB, obviously. But just a few: marketing, finance, HR. You could definitely specialize in one of those 3 areas. There are more. When you form a partnership business, you're not going to do accounts, deal with people, and market the product. Well, if you can do that, it's best to open a sole trader business, right? So partnerships allow you that flexibility to specialize in the area that you feel comfortable in. Their shared workload, it pays lower personal tax and not company tax. So again, taxes, we must incur them. All taxes are being levied on every business. Every business have to incur this tax. But this tax is not going to be company tax. When we see later on into the chapter, you will see why. All right. Disadvantages. We know the similarity here with sole traders. Sole traders also have unlimited liability. Partnerships also have unlimited liability. Personalities is another disadvantage, meaning personalities of partners may cause difficulties in decision making, which can lead to disagreements, conflict. All right. So when you have this conflict arising in a partnership, decision making might not really work out too good. It may not be too wholesome, right? Some difficulty in raising capital, concentrated risk, where risk may not be spread enough. They may not be continuity. If the partnership is broken up because of death, I should really put may be broken up, because continuity can still occur if, let's say, one partner dies. The partnership can still run, it can still be operated. But I said the conflict led to everybody say, you know what, I out. Then the partnership would have been broken up, not because of death, but because of conflicts. So continuity could be a disadvantage of a partnership business. And then we have the sixth disadvantage here on the slide stating profits are shared. Who want to share their profits? Who want to share their profits? I want all the profits to myself. But when you're in a partnership, you have to share your profits. Okay. Now we are looking at cooperatives. So before we look at this, do you all have any questions? I'm seeing your chats here. I'm seeing that you all agreeing with me with some things. You know, we don't want to share no profits. Yes, that's it. That's human behavior. But if you're in a partnership, that is one thing you have to be mindful of, the sharing of profits. But hey, you might be lucky. If you invest a large amount of money into the partnership, I should get a larger profit, right? I should even get a bonus for that because I invested more, right? So I hope you all okay. If you have any questions, please message on the chat. So we are into cooperatives here now. So businesses that are formed, owned, and operated by its members. Okay, so cooperatives basically come together to provide some unique service or a form of service to the population, to the society, whether it be financial advice or, you know, okay, let me just think of a bank. We have Scotiabank, we have RBL, we have RBC, we have First Citizens, we have all these different banks. And yet, when I'm sure if none of you all are working in any banks, I mean, I hope no. When we are looking at these financial co-ops, it's a different kind of service that you might get in these different cooperatives compared to what you will experience in a bank. And why do I say this? Not because I used to work in the bank, but because of, we have more leverage, we have more advice, we have more, money coming in to our accounts when we have some type of shares with them. So like, for example, a credit union. Do you all know what a credit union is, or are you a part of a credit union? Compare a credit union to a bank nowadays. I'm sure when you all get, let's say, dividends throughout the year, compared to a little interest, a 5 cents, a 10-cent interest for just having an account. So dividends, you might get, let's say, for the year, we made a profit of X amount of money, and all our people here who are in this credit union, we are going to give you all a little extra. That little extra is our dividends. So financial co-ops, it is a cooperative, but it's different from a bank. It's different from Scotiabank, just naming that bank, First Citizens, right? It will be different. So cooperatives, they provide a unique service that will provide you with better leverage. And then we have a consumer co-op. So consumer cooperatives are involved in the provision of goods and services. So that's another type of cooperative that can exist within an economy. And we have as well agricultural cooperatives. Just hearing the term, if in exams they ask you, hey, explain what agricultural cooperatives are. I know you all have some common sense. They provide agricultural products and equipment to farmers. So these cooperatives will offer these types of assistance to its members that you may not get anywhere. Are you all seeing this? Are you all agreeing with what this slide is saying? Any objection? Anything you all want to include? Yeah, seeing some thumbs up here. All right. Okay. So we can move on from the cooperatives and look at what they specialize, what are the characteristics. Again, if you have any questions, please message in the chat. The characteristics of a cooperative. So all members have a vote, limited interest on money invested, profits distributed among members. The members are the clients. Members usually have a common bond, a bond. So what does that mean? Just in layman terms, if you're part of a credit union, you're like part of the family of this credit union. We have meetings together. We will talk about your needs, your wants. You will hear what you want us to offer, right? It's like a family that you will see in a cooperative. They're cooperating together. I mean, I hope your families, there's cooperation among families, yes? So think of a cooperative as like a family where every member is important. You are part of this cooperative. You have a say in this cooperative. You can vote in this cooperative, right? We have these common characteristics that you will see in a cooperative. Easy member purchase shares to form the capital base of the cooperative. So we looked at a sole trader, we looked at a partnership, and now we're looking at a cooperative. A cooperative, you can have individuals extending to over 20 persons, okay? But we have something here called shares that will really be different from what you will see in a sole trader and a partnership. Shares basically mean this word here, S-H-A-R-E-S. Shares is like we are going to be part members of this cooperative. We have a say. We invest our money, and so it's an investment in the business. And when we're ready to get dividends, we get them. So shares is something that partnerships don't offer. Sole trader don't offer it either. Only the cooperatives, and we're going to look at company accounts just now. But shares, you don't see them in the sole trader and the partnership. They are not to that extent. Okay. We see that employment is provided. Cooperatives, it's like a family. So if you see a unique skill that you can offer to this cooperative, employment being provided, there is a market for the members. It is owned and operated by members. Therefore, there's greater commitment to making it a successful venture. A medium through which government can channel aid to the society. All profit shared among members, and their shared decision making. So cooperatives do make a lot of profits. From my personal belief, cooperatives, they do make profits, and they will not keep all the profits to themselves. They will share it amongst their members, right? Like a family, right? Disadvantages, however, poor, inexperienced, and unqualified management. This can definitely hinder growth. So if the cooperative hire inexperienced, yes, you have a creative skill or a unique personality. All right, that is actually good. But if they're inexperienced and we tend to go to the wider public to join this cooperative, eventually the cooperative may not be able to function the way it's supposed to make their profits. It might hinder that growth aspect in the business. Conflict among members can lead to slow decision making. So, like any family, if there's a conflict, you might go this way, I might go that way. We don't watch me, I don't watch you, don't talk to me. Conflict can happen in a cooperative. So when that happens, sometimes, they might have a vote of who wants to be in control, who wants to be voted out, right? Depending on the votes, we see who's staying, who not staying, kick you out, right? So conflict like that, you will see it in a cooperative. So if you're part of a credit union, and if you've ever been to a credit union meeting, all you will know what I'm talking about. I'm sure there's some adults here besides the PoBs. I'm sure if you guys have parents who are part of credit unions and you all go to these credit union meetings, the amount of bacchanals happen. Yes, that is the conflict, right? So if you all are not part of it, ask about it. There are so many credit unions that you all can join, but be mindful of the conflict. It's like crazy. It has been noisy. Yeah, I see your messages here. It is unable to attract skilled professionals. All right. So sometimes, having this group of, let's say, this credit union, having professionals to actually run the credit union might be limited because we started up with a few persons interested to this credit union, and it just so happened that we have competitors. We will have other credit unions opening, other families, and as a result, compete with that, knowing that we didn't come from much, we were not able to enhance our skills. We might be unable to really compete successfully with other credit unions because of our unskilled professionals. Okay, so these are just a key points to really note in exams. It's going to be there. I will stress this not too much because it can come in your paper 1, paper 2, but I will stress that it will somehow be in that paper. And when we are answering the questions, we have to be mindful of the marks that are being allocated to these questions. It is very important to be mindful of that. But when we get around to the past papers, you will see what I mean. So companies is our next type of business organization. So we are almost through with the different business organizations. We see a company is a business entity which has been incorporated. It is a legal entity separate from its owners. That is, it can either enter into a contract, they can sue, and can be sued. Now, that's a famous, familiar phrase that you will hear amongst businesses. We have to establish legal entity. So I'm not going to move to A and B yet. I'm going to talk about what this paragraph is simply saying. When we speak of legal entity with companies, if I want to run a company, if I want to open a company, so I have my board of directors, I would have different departments. I'm gonna ensure that I have, people. So yes, being these different departments, I am basically having this company. And I just say this company um, wasn't able to offer superb customer service or good quality goods to customers. And I just say this customer just got so disgruntled, they want to sue the company. They cannot come and sue me because I am the owner of the company. The company is going to be different from me. Yes, I opened the company. Yes, I'm running the company, but I am not the company, if you all understand what I'm saying. So a legal entity, we're seeing two entities. You're seeing me being the owner, and you're seeing the company. The company entails everyone, including myself, but everyone as well. So when it says it can either be sued and be sued, when they're suing the company, they're not suing me alone, but the entire company. Yeah, so with companies, you just have to know that basically they can either enter into a contract where it can sue and be sued. If I want to sue someone else, or I want to sue a business or sue a customer or whatever it may be, it's not me personally doing that. It's the company doing that. And vice versa. Customers want to sue the company. They're not coming in front of my house, knocking on my door, telling me I come to sue you. No, they're coming to sue the entire company. Companies is a group of people that will be incorporated into one entity to again make this profit. Okay. So do you understand? Can sue and be sued. They're not coming directly to me, but to the entire company. Yeah. Are you all okay with this so far? Right. Okay. So again, if you all need to just recap or just want me to give a different explanation to something, I will find different ways just for you all to understand what the notice basically say. So again, at the company, myself, we are two different entities. Two different entities. So with that being said, there are two types of companies. We have private limited companies. Limited is usually written as part of the name because do you all know why? I mean, why is there LTD part of the private limited company? Think of, I'm going to give you all a hint. Liabilities. Limited liabilities. Private limited companies, they will have limited liabilities, meaning if the company suffers a loss, personal assets will not be repossessed. Only what was invested into the company is what will be lost, not private car, your sports car, your house, your dog. No, they're not coming for that. Hence the reason, if you all ever notice that these LTDs are part of company names, it is because of this one factor of being a limited liability. So all these companies that you see in Trinidad, there's a few that, you have limited at the end of it. You should now be eager to find out, okay, so they have limited liabilities, meaning if they suffer any losses, they may not get their house repossessed, their car repossessed, their their fancy dogs and those things we possess. So that is your limited liabilities, right? With public limited companies, on the other hand, which has the PLC as part of the name, public limited companies, you would see them, yes, in Trinidad, in this economy, but in a different stance. They operate a little bit different from a private limited company. And let me see if we have any persons who would want to volunteer an explanation of the two before I go to the next slide. Anybody want to volunteer the difference between a private limited company and a public limited company before I go to the next slide? You can just raise your hand if you want to volunteer. Okay, so Alyssa, Claudia. All right. So I'm going to give you all a hint. Oh, sure. Oh, I accidentally put it off. Hold on, you guys. Sorry. Sorry, you guys. Hold on. I don't know what just happened. My hands accidentally hit. I don't know what. Share screen. Going back to this. You're seeing the screen here now. Right. So I'm going to give you all a hint. Okay, I'm seeing Haley giving me a very good answer. A private limited company stays within the family, whereas with the public limited companies, I'm going to talk about shares. Shares meaning that they are part of the business. Do you think the entire public could invest their shares in a private limited company? When we hear private, not any and anybody could join a private limited company, correct? Whereas with a public limited company, if you want to be part of this, you want to invest your shares, you want to be part of this family, you can do that. Anybody could be part of a public limited company, meaning that they offer their shares to the general public, right? And yes, Hannah, I'm seeing a very accurate answer here. A public limited company can have indefinite number of members where we can have the entire population of Trinidad being part of this public limited company. Whereas with the private, it is limited to at least 20 persons in a private limited company. Nicola, if I'm pronouncing, yeah? Public limited company, they trade on the stock exchange. And seeing that you all brought up stock exchange, you know, this is where we trade our shares. We hoping that, you know, the economy goes well and we are able to get profits, dividends, you know, we could get our gains by trading on the stock exchange. The stock exchange is where people will meet to bargain their prices of their shares. They might purchase whatever investments that they may have, right? So many activities happen on the stock exchange, and companies, public limited companies, they trade on the stock exchange. So this is so exciting. Reason being, you all can now look at companies that could be traded on the stock exchange. If you all ever notice on the newspaper, you'll see the shares on the newspaper, meaning it's open to us. It is easily accessible to us, right? I'm seeing another great answer from Carissa. where the private limited company is owned by private owners. This is my common sense friend right here. I like this one. Private limited company, it is owned by private owners, whereas the public limited companies is owned by the government. That is right there in a nutshell, the main difference. I mean, everybody else gave me some good answers. You all gave me some excellent answers. But private owners. Public, the government. So that's a good way to remember these things. We don't have to cram for the exam. We don't cram. We make sense out of everything, right? So with private limited companies, a company where 2 to 50 shareholders form a company, we have the characteristics. We have limited liability, separate legal entity, they're governed by the Memorandum of Association and the Articles of Association. I'm stopping there on number 3. Articles of Association and Memorandum of Association are just policies, or I should say, what is required to form a private limited company. You need to be registered and be part of, yes, having a Memorandum of Association and an Article of Association. Think of the Articles of Association being what detailed information you have in your company. So all of the internal aspects, the name of the business, the amount of employees in the business, what goods and services you're going to offer in your business, that is going to be outlined in your Articles of Association. Whereas the Memorandum of Association looks at the external part of the company. So they look at who we're getting our goods from, where are we getting it, who may be our competitors, or even so external. So I just have to think of all the external parts that will take part in this business. So articles, internal, details of the business. Memorandum of Association looks at the external aspects of the company. Okay, so they need to be governed by these 2 important documents. So if an exam, which we will be looking at soon, past papers, when we come across Memorandum of Association, Articles of Association, simply just remember articles look at the internal aspects of the business. Memorandum looks at the external aspects of the business. And there's so many other items that we could call out here, but just a gist of it, that's what we will look at for now until we start getting into the past papers and we advance our understanding with what section 1 of the syllabus is saying. Another characteristic is that directors are elected at the annual general meeting. So this AGM needs to take place in order to select our directors, right? There's proper accounts must be kept for tax purposes. Now, when you all get into company accounts in PoA, you all are going to notice that these companies have to pay a particular tax. And let me see, any common sense? I know you all have common sense, but anybody want to give me this common sense answer? But what is the name of the tax that companies pay? What is the name of the tax that companies pay? Some here and some business tax. I see in government tax. I see in VAT. All right. In property. Okay. So, and that's here that all of these are correct. These are different taxes that businesses do pay. One person was able to give me the answer. There you go. Correct. Corporation tax or company tax. That's the common sense right there. So I'm making out of more common sense answers and questions that I'm asking you guys, and those who are able to answer it. Good. So the tax that is being paid by companies, it's called corporation tax, also called company tax. Or you can even have it as business tax, which I saw somebody, Brandon, saying that earlier. There is 2 to 50 shareholders, we said that just now, and they tend to be owned by families and close friends, private individuals. All right, so that is private limited, and you could just take a read quickly of the advantages and the disadvantages. So again, there's separate entities. Shareholders have limited liabilities. All right. So anything that doesn't make any sense to you guys, please feel free to let me know. But so far, everything we just spoke of, you all are seeing why these are some disadvantages that a private company will have, and why some of the advantages are here as well. All right, so I'm moving on to the next slide. So if you all want to just take some notes, if you feel that by writing this down after the session is finished, please go up on YouTube. When I create the Google Classroom, you will get access to all the materials where you all can make your additional notes if you all feel by writing and elaborating on some notes. It will be there for you guys, right? So moving on to the next company, which is public limited company. We seeing here that the shares are only offered to the public. So it is an incorporated company which offers shares to the public. We have limited liability, a separate legal entity. Again, it is governed by these 2 important documents, the Memorandum of Association and the Articles of Association, as well as the prospectus. Right? The prospectus basically summarizes what the goals, the aims of what this business will really entail. Directors elected at the annual general meeting, proper accounts must be kept for tax purposes, and shares are sold to the public, members of the public. All right. So it is called the PLC, Rehan Samaru, right? It is the public limited companies. It is PLC. That is the abbreviated term that you will see for the public limited companies. Yeah. And these are the advantages and disadvantages. The company is separate from its owners. They again have limited liability. So you'll notice I didn't mention sole trade or partnerships, because sole traders and partnerships can't touch this as much, that they can't reach to having a large company, a large business, a large organization of what we are seeing here. Sole traders and partnerships, they are small in nature. When we're dealing with companies, we're getting a little higher. All right. Easy access to loans. That of an owner will not affect the continuity of the business. risk is spread among shareholders, easy transfers of shares. Disadvantages, the objectives of the managers may be different from owners. Again, you're always going to come across some kind of conflict in any organization. So let me just stress that out. Conflict will arise, and as a result, it is one of the disadvantages that you will see in all different business organizations. Workers are not part of decision making, and the accounts must be submitted for inspection. Because we're dealing with the public limited companies, all their financial statements, all their gains, their losses, their reserves, their expenses, do you know that they are posted for everyone to see, including you and I? How do we see these information? We see it on the newspaper. We see it being published sometimes on government websites. So accounts must be submitted for inspection. It has to be presented. And again, for those who didn't POA with me, you all know presentation is important, because if you all have to submit accounts for review, let's say from the general public, you have to ensure that it is accurate and there's not any misleading information. It is clear to read. All right. So that sums up the public limited companies. So we're almost through. We reach conglomerates. Very simple. It is just a group of companies. Each of these companies have different industries. So a group of companies, but in different industries. And you always see it here in Trinidad. We have Hilo. Hilo is no longer Hilo. It's called Massey Stores. But you know, there's also Massey Motors. There's Massey, give some examples, you guys. Help me out here. Massey, Massey Motors, Massey Stores, Massey Engineering, Massey Energy. Yeah. So not all these companies I just call out operate the same way. Massey Stores cannot sell cars, but it's under the main parent company, which is Massey. It used to be Neil and Massey back then. For those who around my age group, you know, for those who are new to this, Form 4 students, you know, back then it was called Neil and Massey. Don't ask what happened to Neil. Don't ask me that. I never searched up what happened to Neil. I think Neil had a fallen off with Massey, and it just have Massey all over in Trinidad right now. But you all could Google it. What happened to Neil? And I will come back next week, or when September term start, and when I put on the recordings and everything, you will tell me what happened to Neil from Neil and Massey, right? There is Grace Kennedy in Jamaica. You have different conglomerates operating under them, right? So think of this one company, this one person, or this head operation that has different industries under it. All right. But the main goal and their main purpose is to make a profit. All right. That is the main aim of a conglomerate. So conglomerate, they have a group of companies, but each company operates differently. So the advantages and disadvantages that we are seeing here: advantages, opportunities for training and transfer of staff between industries. So I remember when I used to work at one of the Massey stores, not Tyler, but one of the Massey's conglomerates, you know, I was able to go to another Massey, but it will not be the same nature of what I used to do. So I'll just say Massey Motors. I used to work at Massey Motors. You know, when I went to Massey Engineering, Massey Motors that sells cars, Massey Engineering, really just now I just have to read a chat that I'm getting distracted with. They got divorced. Okay, so I'm getting some answers from Neil and Massey. So this is a conversation that we have to have for when we finish the summer program and we reach back down to this again, we will have this conversation. All right. So yes, when we looking at these different conglomerates, you might be focusing on selling vehicles, and then you might move to now issuing checks or something like that in a different department or a different company. So there are two different organizations, but still under that main conglomerate. Good cash position, since all company, okay, I didn't finish that sentence. Good cash position. Since they all have that objective of making profits, you know, each company will have that goal of making that profit. So that's number two. I didn't continue. So it's to me, since all companies with the objectives of making a profit. Industries can advertise under the group name. All right. Risk of group failure is spread over a range of industries. So it's not just one company, but other companies falling under this conglomerate. There's no common objectives other than profits. So again, they're not going to fight down each other. They're not going to compete with one another, because I mean, it's like your parent company, your parent having these different industries, they will not compete with one another because it is under this one parent. It's like, you won't do that, right? So the profit, however, is the objective. So you have to work sometimes tirelessly to make that profit happen. Comparative analysis, which is not possible. You cannot compare Massey stores to Massey Motors. Massey stores sells food items, sometimes one or two little kitchen with equipment. But Massey Motors, they will sell vehicles. So you cannot compare a grocery to a car dealership place. You can't do that. So therefore, there's no comparative analysis. Outside control from the head office is resented. So there's no control. There is sometimes when disputes happen in these industries, sometimes it may take a while for these disputes to be solved. All right. So this slide, we could always come back to this one if you have any questions on, but this is what we have so far on the advantages and disadvantages of a conglomerate. All right. We'll have to come back to that slide if there's anything, right? I think there's some tweaking I have to do for that. But multinationals being I think this is the last company, the last organization we're going to be looking at, second to last, sorry, is one which owns and controls and operates business activities in several countries. So it's different countries operating in different organizations operating in different countries. So you're not going to just see Massey in Trinidad, you're going to see Massey as well in one of the regional countries. All right. Cable and wireless. We have social sure that you all have LG services or different services, right? Multinationals, they have different companies that operate in different countries at the same time. So we're gonna, when we finish with this session, for next week's session, I'm gonna give you all some examples. I'm just trying to just finish off just the theory part here of these different types of business organizations. Advantages of multinationals: they provide investments in local economy, they provide training, expertise, employment, and tend to pay higher wages, a source of taxation and foreign exchange. Again, it provides markets with opportunities to establish themselves. All right. So you have different companies operating worldwide. They will provide that market opportunities so that they can establish themselves in these different countries. That's the explanation for number 4. With disadvantages, large amounts of profits leave the country in which it operates to return to parent companies. So in other words, there's repatriation. So I'm going to stop here for this number 1 here. I'm going to explain what I mean by repatriation. Repatriation means that whenever we have a parent company, let's say situated in one country, and they have the multinationals in other countries, these multinationals that are being operated in other countries, whatever profits they make, it will be repatriated to the parent company. It will be repatriated. In other words, the profit will be sent to the parent company. That's point number 1 for disadvantages. They may exploit natural resources of small countries. The welfare of the country is not the concern of the company. It may leave the country after tax holidays are over. So sometimes multinationals may operate in a country where there are a lot of tax holidays, meaning that they don't have to pay much taxes. But once that's over, they're gone. That's the thing with multinationals. They may harm the environment. There's a lot of companies, a lot of industries being operated in different zones of the country, different areas worldwide. So they may harm the environment, and they may leave if political ideas are not the same as theirs. All right. So this should really be, they may leave if political ideas are not the same as theirs. They'll go back to their main country. All right. So I don't want to rush this down, you guys, but where I'm seeing some examples of you all saying KFC, we finally wish like you all have to think like me right now, thinking about food. Franchise. A franchise, like for example, KFC, they are being operated all over. Burger King, they are operated all over. They enjoy profits, but they also will incur some losses. So a franchise, we have an individual, a franchisee, who will be bought from the franchisor to sell in different countries. We will use their names. We don't have to do any market research. We don't have to do any any analysis of would we make it, would we succeed. It's already established, so we do not have to fret and be concerned about are we going to make profits or not. It's already established, right? So a franchise is already established business that we just operate in different countries. Then we have nationalized industries. where just hearing the word nationalize is where the government takes over certain economic and political parts of the economy. They are being taken over by the government. So any private companies that exist that the government feel that they can have full control of, what's going to happen is that the government will take over that private company and form that nationalized industry. We have the features here of legal entity, which is managed by board of directors. There's annual reports that will be laid down in Parliament. There will be no shareholders, and they are funded by government loans and grants. All right, so this whole legal entity again, just think of nationalized industry being an industry run by the government. They take over private entities to form a nationalized industry. There's a lot of bureaucracy that happens in this type of industry where a lot of red tape, a lot of government dealing with the ins and outs of what is to take place. That is basically what sums up the advantages and disadvantages. So there's safe jobs, there's a lot of job security, reasonable prices, because I mean, as a government do not have the intentions of making profits. Private entities, yes, their aim is to make profits. All right. The disadvantages: red tape, meaning bureaucracy. We can't do this, we can't do that. It's a lot of stringent rules, laws. They cannot bend, in other words, for anyone. They have to do what they are stipulated to do. So that deals with point number 3. As we are aware that not all public companies are efficient, like some of the public hospitals, you will see sometimes inefficiency taking place. All right, so you all have this slide here that you all can definitely review over. If you have any questions, please write them down for next class if there's anything, or even now before class finishes, right? Right. So public versus the private sector, we said, plain out common sense. Public companies or the public sector are run by the government. Private sector are run by private individuals. Public sector, you can trade on the stock exchange. Private sector, you cannot. It's only by private individuals. That's what this slide is basically saying. So we said that earlier. I just kind of put it in here so you all will note it again. And the differences between them. Public sectors by the government, private sector, private individuals. They are profit motivated under the private sector, whereas under the public sector, they are not profit motivated. It's all about providing public goods, ensure that everyone is able to benefit from the goods and services that are being offered by the entire economy. Private sector, they want to make their profits. They are controlled by their families or shareholders. So this is just a difference again between the public and the private sector. We just have the nationalization. This slide is supposed to be with nationalization. We said it's a transfer from the private sector to the public sector. So basically, government taking over the private sector to maintain efficiency, to have stable level prices, secure employment opportunities, overcome any inequalities of wealth and of that sort. All right. So all of this, we just want to get all this out the way. This is everything relating to the different organizations that you may see in an economy, that you will hear people talking about. So it's just for you to know what these different organizations mean, what they entail, what are their advantages and their disadvantages. That's what this entire topic was supposed to just talk to us about. And that's basically the end of what I was just trying to get to show you all with these different organizations. Please note them down because in exams, they can ask you any one of these different types of organizations. All right. So that is it for session 2. When we come next week, please go ahead. I'm going to answer any question that you all may have based on what we just looked at, which is different organizations. And we are starting economic systems, which is a topic that we would have looked at in economics already, right? But for those who are in econ, where you all should be at an advantage, you all should see what we are looking at next week is what we would have looked at already, right? So please review, recap, go up on YouTube and make your extra notes if you have to. So you all will always have it there, right? So that's it for this end of session 2. I will answer any questions that you all may have. I'm just going to pause the recording here now, and you all can ask me any question that you all may have. If not, have a good night, you guys.